Whether you're a complete beginner or a seasoned investor, or you're just interested in business, you need to learn about Bill Ackman's biggest investing regret, which I'll be going into in this video. Trust me, you don't want to make the same mistake this billionaire did. Alright, so first, let's talk about Bill Ackman, the American billionaire investor and the person who founded and is the CEO of Pershing Square Capital Management, a well-known hedge fund. He grew up in New York and actually came from a real estate background. He went to Harvard for both undergrad and business school, and after he got his MBA, he set up his first hedge fund with a Harvard classmate. So, on the surface, Bill had a pretty direct and straightforward route to success. As of 2022, Bill's net worth was estimated to at $2.8 billion by Forbes, which is pretty crazy. Clearly, Bill knows what he's doing, but he's not perfect and has made mistakes, the biggest of which we'll be diving into now with key lessons for you to take away. Bill was all over the news due to a really bad investment in Valeant Pharmaceuticals. If you ask him, he'll tell you it was one very big mistake, but let me tell you, that is a massive understatement. Bill ended up selling all his Valeant stock for a whopping loss of over $4 billion. According to Bloomberg, his firm bought the stock at around $166 per share and then sold it for just $11 a share, which means he lost 93% of his investment. His firm even said in a press release that the investment took up a ton of time and resources. Can you imagine losing that much money on one investment? I mean, it would be rough. But don't worry about Bill too much, he's still a billionaire, so he's doing just fine. Even though this investment was a disaster, there are still some things to admire about it. It takes a lot of confidence and courage to make such a huge investment, and not many people have that kind of conviction. In fact, when Bill made this investment, it reportedly made up more than 20% of Pershing Square's assets. That is a bold move, but unfortunately it didn't work out in this case, and the result was pretty catastrophic. Okay, so here's the thing about Bill. The guy's known for being a bold and brash investor, and apologies aren't really his thing. He's made a ton of money for himself and his investors with big out-of-the-box bets. But he admitted that his biggest bet yet on Valeant Pharmaceuticals was a massive screw-up that cost his hedge fund firm, Pershing Square Capital Management, a ton of money. He even went as far as to say sorry in an annual letter to his investors, saying, "I deeply and profoundly apologize." It's not often that you hear a successful hedge fund manager like Ackman admit to making a mistake, so this is pretty significant. Everyone can make a bad call in the stock market, no matter how much money they handle or how influential they are. The high-profile failure of Bill Ackman and his hedge fund's big bet on Valeant Pharmaceuticals can serve as a valuable learning experience for anyone trading or investing in the public markets. Here are a few key lessons we can all take away from this mess. Lesson 1. Ego is a sneaky foe that can creep up on us and get in the way of making sound decisions. It's especially dangerous in the financial world where big egos can lead to big losses. In the case of Bill Ackman and his investment in Valeant Pharmaceuticals, it looks like his ego might have got the best of him. Despite all the red flags and warning signs, he held onto his investment as the stock price plummeted, resulting in a massive loss of over $4 billion. This situation highlights the importance of being objective and not letting your ego cloud your judgment. As traders and investors, it's essential to always be willing to admit our mistakes and cut our losses when necessary. It's all too easy to get attached to a stock or investment, especially when we've been vocal about our bullish outlook. But it's crucial to be able to step back and assess the situation objectively. So the next time you're making a trade or investment, take a step back and ask yourself if your ego might be getting in the way of making a sound decision. Remember, it's not about being right all the time. It's about making smart, informed decisions that will help you reach your financial goals. Lesson 2. Going for big wins can be dangerous. Taking a big position with the hope of big profits can be great if it works out, but when it doesn't, it can hurt returns for a long time. The VRX investment is reported to have caused losses for Pershing in 2015 and 2016, and even when it was sold in 2017 at $11, it was down 32%. This shows how a single big bet can affect overall performance and highlights the importance of diversification and managing risk in investing. Taking a few smaller swings at the plate instead of swinging for the fences every time can be a more sustainable and less stressful approach in the long run. Lesson 3. When it comes to investing, continuing to pour money into a losing stock is never a good idea. It's like getting on a sinking ship and trying to keep it afloat by adding more weight to it. That's exactly what happened with the valiant trade for Bill and Pershing Square. For over a year, the stock was on a downward trend and just kept getting worse. Instead of cutting their losses and moving on, they kept buying more and more. This is what's known as averaging down, and it's a dangerous strategy. When a stock is in a long-term downtrend, it's seen as guilty until proven innocent, and it could take years for it to return around and start going up again. By continuously pouring money into a losing stock, you're putting yourself at a major disadvantage and setting yourself up for even bigger losses in the future. So there you have it, Bill Ackman's biggest regret. Remember, trading and investing is not just about making money, but also about avoiding costly mistakes. So let's learn from Bill's mistakes and make sure to avoid making the same errors in our investing journeys. And remember, always keep an open mind, stay disciplined, and stay away from putting all your eggs in one basket. Here's to making smart investments. If you enjoyed this video, be sure to like, comment, and subscribe, and I'll see you next time.